Hi, everyone. It's Jason Maida with American Pacific Mortgage. As the #1 provider of the CalHFA loan programs, we thought I'd provide you with a quick overview of what these programs look like. CalHFA is an agency designed to help support low to moderate income households in first-time buying all across the state of California. Now, let's talk a little bit about some of the loan programs offered through CalHFA. Now, oftentimes clients get HFA and FHA confused. HFA, of course, stands for the Housing Finance Agency. Now, FHA is a loan program offered, and there's also other loan products like the conventional loan, USDA, and VA loan. Let's take a closer look at some of these products. The FHA loan has a minimum credit score of 640. It does have a minimum down payment of 3.5%. The loan amounts for FHA are set by the county where you want to purchase in California. The next product is a conventional loan, has a minimum down payment of 3%, minimum credit score of 680 for what we consider as moderate home buyers, which would be someone that makes up to 150% of the median income. If you make less than 80% of the median income, the minimum credit score is 660. And then there's the USDA product. The USDA product is for clients that want to purchase in more rural areas. It does have a minimum credit score of 640. There is a zero down payment option, and we'll talk a little bit more about assistance programs that can help support closing costs on USDA. And then there's the VA home loan for our veterans that have eligibility, also a zero down payment option, minimum credit score of 640. The MyHome Assistance provides assistance for the minimum down payment for a first-time buyer. On the conventional VA and USDA program, the MyHome provides 3% of the sales price, and for the FHA loan, it provides 3.5% of the sales price. Now, these funds are deferred payments, so essentially they're deferred until you either sell the home or if you decide to refinance in the future, and the assistance only accrues 1% simple interest. If a client needs additional funds to help reduce their out-of-pocket expense, there's the ZIP Assistance Program. ZIP stands for Zero Interest Program. It provides the buyer anywhere between 2 to 3% in assistance of their loan amount that goes towards their closing costs. This is 0% interest, and again, does have deferred payment, so the client does not have to pay back that assistance until they either sell the home or if they refinance in the future. The MyAccess program provides an additional 2.5% of the client's loan amount that now can be used towards either the down payment or closing costs. Now, the 2.5% is a 1% simple interest rate loan, very similar to the MyHome Assistance, not paid back until you either sell the home or if you decide to refinance in the future. The Dream for All program provides up to 20% of a buyer's sales price or $150,000 in assistance, whichever is less. Now, it's a shared appreciation program. Today, it's not online. As of today, the program does not have funding. We're currently actually funding out clients that received a lottery voucher last year. Now, if something changes with the program in the future, we'll certainly be sending updates to our clients. CalHFA interest rates are set daily by CalHFA. Now, these rates are the same for all approved lenders across California that have eligibility for the program. Now, what we have found, especially with the conventional loan program, that interest rates tend to be a little bit lower than standard market rates. So if you've been doing your search online for interest rates, what you'll find is CalHFA, especially the conventional loan, has lower interest rates because they lack pricing adjustments that exist in standard conventional loans. So generally, with standard pricing, you'll see interest rates based upon down payment, credit score, and total amount financed. But with the CalHFA, especially the conventional loan, it's more of a one size fits all. So regardless if I'm at a 680 credit score or a 780 credit score, I'm going to have the same rate offering. So while all lenders may have the same interest rates that are eligible to offer the CalHFA program, it looks a lot different from a cost perspective. So every lender who offers the program to a consumer chooses their cost structure. Now, one of the benefits of being the #1 provider of the CalHFA loan product is we're able to set a lower margin for these products to make things a lot more affordable for our buyers. The CalHFA program provides great tools and resources for first-time buyers, but I think it does make a difference in who you select as your loan officer with these programs. As the #1 provider of CalHFA programs all across the state of California, we have a streamlined process to give buyers that edge when it comes to making an offer with these programs. In fact, we can close as quick as 14 days, which can really make a big difference in the success of someone actually getting an offer versus not getting an accepted offer. Today's video was just a summary of all available CalHFA options. If you'd like to look at more of a detailed video, we do have an hour-long class available up on our channel. Now, if you'd like to get connected with us to build your own CalHFA customized home buying plan, we do offer a free, no obligation consultation, which is also including a soft credit check, so you don't have to worry about your credit score being impacted. We'd love to be able to get connected with you to help guide you on that path towards homeownership. A link to schedule the consultation is in the description below.